I first off want to take the opportunity to thank the Saskatchewan Beef Industry Conference for inviting us here to speak to you this morning. It's a pleasure for me to be here representing the Saskatchewan Crop Insurance Program. Due to your agenda, it brings up some of the programs that we have with the Crop Insurance Corporation that maybe has not been thought about a lot and needs to be revisited once again by our livestock producers. So you guys are used to seeing me stand up here and talk about price insurance, and you all know I can go on about that all day long. But today, I'm going to talk to you a little bit more detailed of the Forage program, and then I'm going to give you a WLPIP update towards the end. So, the Forage Insurance Program is available through Crop Insurance, and the Crop Insurance Program is administered provincially by the Saskatchewan Crop Insurance Corporation. The corporation's head office is in Melville, and we have 21 field offices across the province. What some producers may not realize if you are not participating in the Forage program currently today is that the Forage program is a premium cost shared by our producers and our government. Our producers pay 40% with the federal and provincial government cost sharing the balance. All our administration costs are as well cost shared by the federal government and the provincial government. Livestock producers have access to production insurance programs that are much like that of our grain producers. Production insurance coverage is based on what producers can expect to produce on their acres at the projected market price of that commodity. For livestock production insurance can provide funds to purchase feed when there is a shortfall. And like I said before about this being a program that maybe hasn't been discussed as of lately, over the last few years, forage has been relatively good to us. Mother Nature's been good to us, and we've been pretty successful in putting up our feed as we've deemed necessary. Well, of course, lo and behold, here comes 2014, and guess what happens? You know, we started the year out, we had late frost that occurred, and then we did not know whether Mother Nature, going to turn on the tap to give us some moisture, so we had those late rains. So we did have the drought scare, and definitely throughout the province, we had feed shortages, and it's always easy for us to look back and go, woulda, shoulda, coulda, but it did allow us an opportunity to bring that forage program back off the shelf, maybe that had not been utilized so much in the past. And we've done some enhancements that I'm going to go through with you with the program. And a reminder that the deadline to participate in our forage programs is on March 31st. So essentially, our forage insurance has 4 categories of forage cover that's available. The forage insurance program has very many specific features and is very detailed in nature. The intent of me speaking with you this morning is just to remind you of some of our programs, and I'll go into these 4 categories in a little bit more detail. But we just, at the end of the day, want to encourage you to get back to your crop insurance office, speak to them about these programs that we do have to offer, and they can go through them with you in the detail that's necessary to better understand them. Of course, we have our booth here as well, over here in the trade show. So we're going to be here for the remainder of this conference for you to be able to stop on by and talk to us about them more specifically. So we're going to look at the multi-peril yield loss program, the crop establishment, the proxy program, and then our FRIP program. So let's take a look at the multi-peril yield loss coverage. This is a yield-based program for a variety of the forage crops. Our tame hay, green feed, sweet clovers, those are the crops that would fall under this program. Customers are guaranteed a minimum yield at a base price. That base price is a survey price that's done in January, so that is being completed as we speak and is conducted by our Saskatchewan Forage Council. Now that base price also has a transportation cost factored in, and that transportation cost is of 50 miles. So new to crop insurance and to our forage program, an add-on that we put into this program was the VPO, which was our variable price option. So that variable price option can be attached to this specific program that allows for a price adjustment at the end of the growing season. And that too is also a surveyed price that's done in September and is completed by the Sask Forage Council. So this VPO that provides that additional coverage, when price increases over the growing season, when the prices can increase over the growing season. And you can insure that price plus or minus 50% of that base price. The premium increase associated to that VPO is about 10%. So if the customer had a premium at 6.5%, the base price, and he selected the VPO, it would bring it to 7.15%. Yield guarantees are based on your individual yield history, and you can select anywhere from 50 to 80% of your long-term average. Claims are paid when the producer's actual yield is less than that of the guaranteed. So let's take a look at an example, and this is an example selected from a random forage area here in the province this past year. So in that particular area, the alfalfa long-term area yield was 2,625 pounds per acre, and you took the maximum yield coverage of the 80%, so you in essence were insuring 2,100 pounds per acre. 2015 insurance base price for alfalfa was 0.05 cents per pound, or $114 a ton, and that coverage worked out to $120 an acre. So the total premium associated to that was $19.50 per acre, or 16.25%. But of course, because of the cost share of the premium, to our producers it was $7.80, or 6.5%. The actual yield for this particular area came in at 1,000 pounds per acre, so that was a loss for him of 1,100 pounds of acre. So that worked out at the 0.05 cents per pound to $63 per acre was the payout for him. Now, if he would have attached the VPO to it, and of course we know what happened with feed costs this year, it spiked going towards the fall, then he would have received an additional payout as well that would have brought it up to $94 an acre. So to go from the base coverage of the 63 up to the 94 using the VPO, it would have been an additional cost of 78 cents per acre to achieve that. So the establishment coverage is for establishment benefits, and it's insurance on newly seeded acres for perennial forage. This was at a rate of $55 per acre for our tame forage, and it provides a spot loss compensation for acres of crop that do not establish. Tame and our native perennial forages fall into this program, as well as the sweet clovers. It is a deductible-based program, and the deductible for that was 15%, and the average customer rate was 7%. A perennial forage crop must be seeded by June 20th, and if by the following spring it appears that that crop is not establishing, the producer has until that June 20th to make a claim. The proxy program is the forage diversification option, and it's intended to offer some coverage on smaller acreage forage crops that do not fit into one of our yield loss options. So this is the program that you would put your cocktail crops on, such as your annual ryegrass, maybe your millet, whatever new and rare crop producers may want to try. So this coverage is based on the risk area yield and the price of barley. So claims are triggered when the barley production falls below 80% of the long-term normal barley yield for that risk area. And because it is a risk area-based program, the premium rate on that is quite low, and it's 2%. So the FRIP program, and this is a common program that has continued to be used by a lot of our livestock producers, and that's of course our forage rainfall insurance program, which provides the coverage for our tame and native grazing acres. In 2015, the coverage ranged from anywhere from $9 to $30 per acre, and it's based on a measurement of precipitation at one of the 131 weather stations that we have across the province. Claims are triggered when the seasonal precipitation falls below 80% of the normal long term, and the average customer premium rate for this program is 5.25%. We also have a corn heat unit program for our corn growers. And it's insured against lack of heat units in that growing season, and coverage for this past year ranged from $100 to $300 per acre and an average customer rate of 2.5%. Now, as I've traveled across the province, speaking, with WLPIP on forage, it's been quite a surprise to me at how many corn growers we actually do have in the province, and especially it's been an eye-opener to me of the corn growers that we have in areas that I would have not thought you would see corn production occur. So we do continue to work with these programs and with our producers. And of course, as you know, as we have more producers producing corn, allows us for a lot more data to see how we can better enhance those specific programs for you. But the proxy program that I just spoke about a little bit earlier, that's another program that you as a corn grower could utilize. So recent performance. So the Forage Insurance Program is designed to provide disaster relief when the producers need it the most, just like we had this past year. The average tame yield loss claim was approximately $40 per acre in 2015, with many of our customers receiving upwards to $100 per acre. The average premium paid by the customers was $3 per acre for that. 94% of our FRIP customers received claims totaling over $5.4 million. And the average claim was $8.60 per acre, and the cost for that as a premium associated to our producers was 71 cents per acre. So since 2000, the Forage program has paid $2.32 for every dollar of customer premium that has been collected. So the Forage Insurance Program is extremely affordable, and it's an affordable way to manage the significant risks associated with forage production, primarily because the governments are cost sharing in our premiums. So some of the implements that we brought into the current programming year and enhancements to our forage program was the variable price option that I spoke about, as well as individual yield updating, coverage stability through yield cushioning, and establishment of coverage levels. So again, I encourage you to come and talk to one of our crop insurance, come into the local crop insurance offices and speak about these programs with them in more detail. So SCIC continues to work closely with our livestock producers and our forage groups. Of course, we're working very closely with the Sask Forage Council, and we're very appreciative of the work that we've been doing with the Saskatchewan Cattlemen's Association. Now is a great opportunity for you guys as producers being gathered here over the next couple of days. We have all your board directors with SCA. So come and talk to us about things that you would like to see, maybe as enhancements to our program, or definitely bring it to your SCA representatives as well. And then you can also visit us at saskcropinsurance.com, and we have a lot of information on there. We do have calculators that are available to you on this site that you can go on and program, like punch in where your location is, and you can see how the program could have functioned for you in the past year. So of course, all these prices that I've quoted to you were 2015. We will be coming out with the 2016 rates here shortly as we move forward into the spring. And that's the end for my forage presentation. Do you want me to wait for questions till the end? Yeah? Okay. Bam. Okay, we will move right into the Western Livestock Price Insurance. I don't have a lot here. I'm just going to give you guys a brief update as to what we've been up to and what is currently happening. So 2016, as we head into the new year, you guys may have noticed I've definitely had quite a few calls. The Saskman premium table, feeder premium table, became available once again for our producers starting yesterday. So yesterday was the first day that we published the Saskman premium table. The Alberta premium table has been available to our Saskatchewan producers for the last couple of weeks. It always takes a couple of weeks for us to get up and running as we enter into the new year and coming off the Christmas holidays, just to get these cattle markets moving again, just so that what we are offering up to you is being relevant and speaking to some movement in the industry as we're seeing it happen here starting the new year. The CAF program, this is definitely a hot topic, and this program is going to be available for you as a Saskatchewan producer starting February 2nd, with their last day of being able to purchase will be on the last day of May 31st. So be watching for that as that program gets ready to roll out. And let's just do an update. So as of the middle of the month here, like last week, producers that we had enrolled in our WLPIP program was about 2,079 producers. So to look back into 2015, calf policies that were sold were about 1,018 policies. Now, from that 1,018 policy, we said that represented approximately less than 15% of the marketable calves that we said we had in the province. That's what we insured this past year on the calf program. The feeder policies are a little bit tougher to gauge because that is a program that is continuous. We offer feeder coverage all year long. So just coming from our fiscal year, we had 136 policies sold. And of course, every week with our feeder policies, we have them expiring and repurchasing that potentially could be occurring. And so active feeder policies that we had as of last week were 48, and we had 3 fed policies. Those are brand new. They were just bought in the last couple of weeks. So the big news, I guess, and what may have ended up being a surprise to a lot of us, especially when we were at the beginning of 2015, don't know if we all thought that the market was going to head in the direction that it did. 2015 is still going to go down in history as being a relatively healthy year, but we did see at that last quarter of the markets make a pretty drastic change. So on the calf program specifically, in about the span of about 6.5 weeks, we paid out $4.4 million. What's interesting about that is that $4.4 million that was paid out on the calf program was to what was insured, which was less than 15% of what we said we had for marketable calves here in the province. So that was kind of interesting to see. And the feeder program, it's paid out $20,000 thus far. Now, all of our programs, being the calf, the feeder, and the fed, were in claim. The calf stayed consistently in a claim position for quite some time, and the feeder and the fed program did go into a claim position as well. It was just whether or not a policy was sold against that time frame. So that was interesting. 2016, I'm sure, is going to be an interesting year once again for us going forward. I think the program did send a message to us that it is responsive and it is working in hand with what's been happening to us as producers and price risks that we have out there. So again, the calf program will be available to purchase starting February 2nd. This is our website, www.wlpip.ca. We have a lot of information on here. And now that we've rolled this program out, we're just completing our second year with WLPIP. There's getting to be some good historical data on here. We do have a historical calculator that you can go on and take a look at, and we publish all of our prices that we've offered for coverage for you as a producer since we launched in April of 2014. So I encourage you to go onto the website, go back, you can take a look to see what we were doing. The interesting thing to be watching as we go forward and the changes that we've seen since we launched in 2014 is going to be that of the premium. The premium has changed, and for those of you who've got experience with WLPIP so far, you know how quickly that change can happen. And the change in the premium and where those costs go is going to be a complete derivative of how much volatility continues to stay in this futures market and our current cash market. So I thank you very much for your time this morning, and I'm open to any questions that you may have.